Ladies and gentlemen, thank you for joining. As always, I appreciate you tuning in. I hope you're enjoying the content. I have a great episode for you today. I interviewed Cherry Chen, an accountant that specializes on working with real estate investors, and not just real estate investors, but small business owners, realtors, people for the most part who have investment properties. And we covered a bunch of different topics. We talked about her favorite apps. So things that make it easier for you to do your bookkeeping, your paying out contractors, just all sorts of different stuff that are related to your taxes and your bookkeeping. So I think you're really going to enjoy that part. And we also talked about corporations. So buying and hold corporations versus flipping corporations, why you should separate the two. In addition to realtor and corporations. So I'm a realtor myself. I was curious to know, so I was a little bit selfish, but just wanted to know because this is something that's newly coming into effect. So I hope you'll enjoy the episode. If you do like it, leave us a review if you're listening to it on a podcast application or platform. If you're watching on YouTube, give us a like, subscribe, and share it with your friends and family. And if you want to find out some more information on real estate investing content, there's plenty of stuff on welloff.ca/report. There's all sorts of stuff for you to check out. You can just download it for free there. So have a look, www.welloff.ca/report. Enjoy the episode. Welcome to the Well Off Podcast, where the goal is to motivate, inspire, and share success principles. I am speaking with Cherry Chen today, who's an accountant, began her career in 2003, and she is currently with Mr. Hamilton himself, Erwin Zito. She is part of the Rockstar family. So she specializes in working with real estate investors, developers, property managers, contractors, realtors, mortgage agents, and small business owners, most of which invest in real estate. So Cherry, thank you and welcome to the show.
Thank you so much for having me. It's a pleasure to be on the show.
Yeah, same here. The pleasure is mine. So what I normally like to do, Cherry, before I get started, I like to ask you about your childhood. So where you grew up and just maybe something you remember from your childhood.
Wow. That's a very deep question to begin off with everything.
Yeah.
I guess it's a lighter question than talking about accounting. So I was born and raised in Hong Kong. For the first 17 years of my life, I spent my childhood there. So, and then ever since then, I moved to Canada. I went to high school here, and then I went to university here.
Oh, cool.
Yeah.
Is there anything you remember about your childhood, anything that stands out to you?
Yeah, so we lived in government subsidized housing when, or at least a portion, actually the entire portion of my life lived in, the first 17 years I lived in government subsidized housing. It's a small place that I remember that we share. It was maybe 500 square feet, and there's 2 bedroom, 1 bathroom, 1 kitchen, small living room as well. I share a room with my brother, a bunk bed. And then my parents have their own room. And what I remember most about that phase of my life is that obviously I was a kid, so everything is like I didn't know any difference. The best memory is the people selling. They would sell all these food. They would put so just like Canada, like all real estate investors, they hustle a lot in Hong Kong. So some people would make a bucket of, we call it the tofu pudding. It's a dessert. They would make a bucket of those, put it on a cart, and then push it over to every single building and sell.
Wow.
And it's like a $5, which is $1 Canadian, roughly. $1 Canadian, you give the vendor your bowl, and they will give you the dessert in it. And it's great memory because it smells nice and it's hot and it's warm. You don't see that very often here. You don't ever see it selling anything on the street here, but back in the days, it was really good memory.
Oh, cool. That's a cool memory. That reminds me, so my family's Lebanese, and I remember I was born in Canada, but when I would go to Lebanon as a kid, they would have something similar, but they would have like this bread that somebody with a cart would sell bread in the neighborhoods, and everybody would run down and grab what they could from there. So those are nice memories.
Yeah, absolutely. I love those food and still like it, and my kids still have it. But nowadays you have to go to a store and drive there. It's not the same.
Yeah, yeah,
Yeah,
exactly. That's cool.
yeah,
Okay, yeah. So obviously you are very well known as a real estate investor specific accountant. You work with a lot of investors.
yeah.
I know you've got all sorts of systems in place, and part of your services include bookkeeping, accountware software setup like QuickBooks, financial statement preparation, tax returns, tax planning, and corporate reorganization. So you
Yes.
do quite a bit to help people. Um, I wanted to just start off by kind of asking you about some of the apps that you use now to get all sorted out, so that are friendly with for real estate investors.
Yeah, that's great. So I actually have six, seven, I lost track, six, seven
Yeah.
corporations myself.
Hmm.
And then, of course, I have to manage my husband's books as well. So then that means I have like six, seven, and then plus also charity that I manage as well. And so we have so many different sets of books.
Yeah.
I recognize early on, unless I get super organized or I get help from all these apps, I'm not going to be able to stay on top of having those receipts stored properly for me. So one thing that I did early on is I learned it's to learn all these cloud-based apps. So
Hmm.
your phone can do a lot for you. One of the number one softwares that I use is called QuickBooks Online. A lot of you are using it already. It is an app that you can track your income and expenses based on your bank record. So before we even go into the kind of apps that we need to use as real estate investors, we always educate our clients to have a separate bank account for each property if you own all the properties in your personal name. And then by linking your bank transaction to the QuickBooks Online yourself, a lot of the transactions are already imported by QuickBooks Online to imported from your bank directly to the QuickBooks Online document. And all you need to do is to select, hey, the deposit is rental income. I click rental income and then it's being recorded. Now, the function doesn't stop there. So QuickBooks Online also has a phone app that you can just take a picture of those Home Depot receipt that you incur, and by taking the picture, you can also record the expense. And if you pay it directly from the bank account that the designated bank account for this particular property, then they would match automatically against each
Hmm.
other. And when you look at your bookkeeping, all you need to do is to click match, and then the transaction is recorded. So that's the number one app that I would recommend for small scale landlord.
Hmm.
Now, on top of that, I also use an app called Pluto.
So,
Um,
Cherry, sorry to interrupt, but I
no
just
problem.
wanted to ask you about QuickBooks.
Sure.
First of all, how many properties would you suggest someone should have before they start using QuickBooks, as opposed to just having like an Excel spreadsheet if, for example, they have just one property?
So for anyone that has a corporation that owns properties through corporation, I would recommend them to have QuickBooks.
Hmm.
Now, if you only own properties in your personal name, I've seen clients having tracking everything all the way up to like 5 properties, all
Hmm.
in Excel workbook. But by the time you get to 2 or 3, you will feel that you're not able to keep track of it, and
Hmm.
that is the time that I would recommend you starting looking at QuickBooks
Yeah.
or other way to keep track of your income and expenses.
Okay. And my second question was, so if you have a corporation and you have a corporate bank account associated,
Mm-hmm.
if you buy a second property under that same corporation, would you just suggest opening another checking account under with the same bank?
Well, so yes or no, and no, sorry. Now for the company bank account is typically a little bit more expensive. And if you already have the QuickBooks Online set up and they are linked to each other, it's relatively simple just to sort it in the QuickBooks Online level instead of at the bank level. When you have multiple bank accounts for multiple properties, the reason why we do that is for easy tracking. But if you already have the QuickBooks Online to track it for you, you don't really need to have multiple bank accounts. Now, having said that, some of you would be doing all your real estate investment with a joint venture partner. So if you have a joint venture partner on a particular deal and the ownership, your percentage of ownership is recorded in the corporation, then I typically recommend you to have a separate bank account just for that particular property with your joint venture partner.
Right. Okay. Fair enough. Now we can go on to Pluto. Yeah.
Yes. So Pluto, the way you spell Pluto is Plooto, and it's a payment app, and it's also I guess a rent collection app as well. I use it in multiple businesses. Every month, I think they charge $25. That includes 10 transactions. What it does for me is that from a tenant perspective, I would be able to preset the withdrawal amount. So if George, I rent a property to you for $2,000, and I can send a request to you to withdraw money on the first of every month, and then you have to accept it and enter your bank information. Pluto is going to your bank and grab the money for me and then deposit it to my bank account. Now, it can be recurring, so I only need to set up once. And then obviously if you leave, then I would have to cancel it.
Yeah, so the tenant on the other end, they have to just confirm, because I know like certain applications, they'll do like a deposit into the tenant's bank account, and then the tenant has to report back to you and tell you how much money was deposited. Do you know if that's the same case in Pluto?
No, that's not the same case in Pluto. That would be the case for me. I have to, when I first register the account, that would be the case for me, but not for the tenant side.
Yeah, so that's actually good, because even if you do rent increases, they have to always approve the changes. So it might be a little bit beneficial to skip some steps with Pluto that way.
Yeah, regardless, I mean, when I do rent increase, I would, yes, exactly. The tenant has to reaccept it if I make any changes. It's not like I can just do it without their approval.
Yes, of course.
Yeah, and with this app, the downside is that if the first, like for example, July 1st, it would always be that holiday. I would not be able to get the rent on July 1st. It will take money out from the bank account on July 2nd, and then the money would then be deposited probably 3 to 5 days later.
Yes, exactly. Yeah, and that's pretty standard for most of the apps that do pre-authorized debit. Okay, and another cool thing, I believe I've heard you say, I haven't used Pluto yet, but I believe I will be, but they can also pull receipts for you from your different bank accounts. And like, let's say you have a Rogers account for your cell phone, it can kind of draw that out and invoice it for you, right?
Not
or sorry,
Pluto.
that's not Pluto, that's Hubdoc.
That's Hubdoc, yes.
Right.
Yes.
Okay.
So what Pluto does is that it would pull information from Quickbooks Online as well.
Right.
So the Quickbooks Online import transactions that are supposed to be, like, for example, if you owe someone money, so you hire a contractor and this person asks you for $10,000, and in Quickbooks Online you recorded that there's $10,000 that I have to pay, and then so Pluto, you go into Pluto, it could pull all these information, how your vendors, your payable list from QuickBooks Online, and it would import it, and you can select which one you pay. And then by doing it, and you approve it, by doing so, the money will get withdrawn from your bank account, and then it gets deposited to the other side. It's kind of like e-transfer, except that you can transfer a large amount.
Oh, cool. Okay.
Yeah.
So just to kind of recap, so let's say you hire, like you said, a contractor, they send you an invoice, do you upload that invoice into QuickBooks and then it transfers over to Pluto, or do you just manually put the amount?
You can do both.
Okay. Yeah, so that invoice then gets transferred to Pluto, and through Pluto, you're able to pay that large amount directly to the contractor.
Exactly.
Okay, cool.
Yeah, it gets really handy. It's kind of like your online checkbook that way.
Mm-hmm.
Yeah.
Great. Okay, perfect. And is there a limit? Like are you aware if because I don't know if you can send $100,000 to someone.
I've sent $100,000
oh, yeah?
to someone before.
Okay.
But I've never, Pluto also has a function to pay CLA. With CLA payment, it has a limit. The maximum you can pay per transaction is $10,000.
Right.
Yeah.
Okay, perfect. Okay. And then, so we touched on Hubdoc a little bit. So Hubdoc is just
Mhm.
kind of for receipt management. You use
Yes.
snapshots on your phone. I was just curious, do you still use Hubdoc, or did you ever consider getting one of those scanners that you just put your receipts in and just scans them all?
Yeah. So Hubdoc is a software that, like you said, it will just go, it's kind of like your personalized mailman. That's how I describe it. It
Yeah.
would just go to your utilities company's online profile and grab the receipt for you. It goes to Rogers, grabs the receipts for you. It sometimes, if the municipality, the city that your investment property is located in, also work with Canada Post. Hubdoc would also go to Canada Post to grab all the document, the property tax for you. So it's pretty cool that I have everything all in one place. Now, the reason why I also personally, I also have a scanner in the background. The reason why I don't just use a scanner is because Hubdoc, number one, Hubdoc has an app, so I can just use that to take picture. QuickBook Online can do the same thing. But so when the Hubdoc pulls the document from the company, it can also, if you set it up right, you can also it can also post the entry over into QuickBooks Online.
Right. So they all kind of work together.
Yeah, so it can do an automatic transaction, post it. So essentially it does part of the bookkeeping for you.
Yes.
And then the next best thing for Hubdoc, to have Hubdoc, is that you can also choose to put a copy in an online drive that you have.
Mm-hmm.
So for example, if you downloaded the document from Rogers and you want to keep a copy in your Google Drive, online Google Drive, you can do that via Hubdoc. So it push it to your online drive and push it to QuickBooks Online.
Yeah. And can you set it up to push it to different accounts? Like, let's say the Rogers receipt goes to is associated with my real estate business, like as a realtor, and then I get an invoice from the city of St. Catharines. I want that to go to my corporate bank account. Can I set it up that way?
No, you will have to get two Hubdoc accounts.
Oh, okay. I see.
Yeah,
And what if
because
you
it
have
has two
multiple
different.
properties though? How would that work?
So if you have multiple properties, then we will structure it for you accordingly. Like for example, I have some personally owned properties. So that personally owned properties, that is like 4 or 5, I would put them in one QuickBooks file and one Hubdoc account. The properties I own in the corporation has one QuickBook file and one Hubdoc account.
Mm-hmm. Okay.
Mm-hmm.
Okay. So that's something that you can help set up pretty much.
Yeah.
Right. Okay.
Absolutely.
Okay. Perfect. Next up, so I see a list here of apps that you use. If they're relevant to this, then great. If you just use them personally, then that's fine. But I see Arrow, Wagepoint, Pi, and Wunderlist.
Yeah, so I don't use Wunderlist anymore. I use Asana now, but I do use Wagepoint. So for people like yourself, or like people who hire employees, Wagepoint processing is I guess the app that I use to pay my employees. So it takes money out from my bank account and then just deposit it, and then it can also have the function to file T4 for me at the end of the year. Does everything.
Cool. Okay, that's good to know.
Yeah.
What about Arrow?
Arrow is an accounting firm specific software.
Okay.
So it's not relevant to.
Not to end users.
Yeah.
Yeah. Okay. Got it. Okay. So that's kind of some of the apps. Did we miss anything, or did we cover most of the apps that you use?
Those are most of the apps that I use to organize myself.
Mm-hmm.
I also have a lot of other apps in background that does different things for me.
Yeah. Okay. Fair enough.
Mm-hmm.
Okay. So I wanted to touch on purchasing real estate in a corporation and some of the accounting stuff behind that. So for somebody who's, let's say, buying their first one in a corporation, just to keep things clean from an accounting perspective, do you suggest that they transfer the down payment from let's say from their personal HELOC into their corporate bank account and then have the down payment come out of there?
Yes, absolutely. There are multiple ways to own properties in the corporation. The cleanest way is to have the corporation on title own everything in the corporation's name. And then sometimes that doesn't happen. So some investors like to own properties in trust for the corporation. So the property's name is still in their personal name and the corporation is the beneficial owner. Especially under those type of arrangement, it's important to have all the transaction going through the corporation bank account to actually prove to CRA that, hey, this is the real deal. The trust agreement is in fact in effect. So the substance of the transactions matters.
Mm-hmm. Okay. And what would be the reason that you would want the down payment to come out of the corporate account rather than out of your personal account?
Well, like you mentioned before, it's cleaner that way. Number two is that you have to, it's easy for us as an accountant to track how much money the shareholder has put into the corporation. If the shareholder put in if you issue the check directly from your line of credit, personal line of credit to the lawyer, it's not through the corporation. Not saying that it's not a valid transaction. It's just that from the corporation perspective, I don't see the money coming in.
Mm-hmm.
So it's an off-the-book transaction. If you ever get audited on the shareholder loan amounts that we recorded on the financial statement, and sometimes CRA do that, it's just a little harder to come up with the support and the numbers.
Right. It's an extra step and it's just a little bit more difficult. Okay, fair enough. Okay. So in the case where you have a joint venture agreement and so one person is on title under their corporation.
Yeah.
Okay. And let's say you have excess cash flows, you have a buildup of cash flows, and then you want to pay out the excess. So how would that work if one person's on title and they're the sole owners of the corporate bank account? Is that something that they should be concerned with so that they don't like get taxed on dividends, or how would that work?
So it's two different things. Actually multiple things here, multiple concerns. Number one is typically under joint venture agreement, typically two people are the joint owner of the bank account, and typically they're in their personal name because for some reason, it's really difficult to get two corporations to jointly own bank account together. So it's typically in two person's name. So when they have excess cash available in the bank account, each party would draw out the excess cash, whatever that would be. It could be like $500 a month per person. Now, if you own the joint venture in your corporation's name, technically speaking, that $500 should go through the corporation bank account. Because it belongs to the corporation. Now, if you want to take that $500 back to pay for your own enjoyment in your personal name, you can either take it out as repayment of shareholder loan. Remember, when you purchase a property, you invested a lot of money, and the initial investment in the corporation is usually treated as shareholder loan. So when you take money out, the money taken out could be withdrawn as shareholder loan repayment. Now, once the shareholder loan repayment is all depleted, the second thing that you can do is to pay yourself a dividend or a salary, because you are managing the property. You are eligible to claim salary from the corporation. Both of them would have, each of them would have its own individual tax characteristic and tax impact in the corporation as well as personal name. Okay.
So in that situation, you probably want to consult with your accountant and figure out what would be best. It's kind of a case-by-case basis. Okay.
Yeah.
Now, this might be a little bit more complicated, but so let's say you have that same property that you purchased in the corporation and you refinance it a few years later and you have this extra capital now and you use that capital to buy another property under that same corporation.
Yeah.
What would happen with the excess cash flows in that case? Is that still a repayment of a loan, but because you're kind of repaying yourself, your own corporation? So I'm not really sure how that would work.
So let me just clarify the case fact first.
Yeah,
so
sure.
You're saying we're still doing it as a joint venture, correct?
No, let's just say this one's not a joint venture.
This one is not a joint venture. You simply refinance the property in the corporation and then use the money to purchase a second property.
Under the same corporation, yes.
Under the same corporation, there's nothing happened. The initial investment is still there. There is no tax impact because the refinance money is still going to be used against the purchase of another investment property. Interest is still deductible.
Yeah. Okay. So the original loan amount still applies. You can still pay that out without paying a dividend or whatever.
Yes, exactly.
Okay. That's fair. Okay.
Assuming that it hasn't been depleted completely.
Yes, exactly. That makes sense. Okay. What about income splitting? So that's something that you can take advantage of if you have a corporation. Can you speak to that a little bit and explain how that could be an advantage to an investor?
So there are opportunities, even under the new federal law, that you would real estate investors would still be able to split income with their children, but they have to be over the age of 25 now instead of at the age of 18. If you do it properly, you would then still be able to share income with your lower income spouse and other low income family members using the corporation structure.
Mm-hmm. And I'm assuming that you would do that to reduce your tax liability?
Yes, absolutely. So say you have in personal name, if you were to own properties in your personal name and you already have a full-time job, typically full-time job with $100,000 salary, any additional income would be taxed at 43% and up. So 43% and up is quite a bit. But if we would be able to somehow shift some of this income to the low-income spouse or low-income children, that's over age 25, if it is in the corporation, then it would allow you to pay almost close to $0 tax in the personal side and 20% in the corporation side.
Right. So this income splitting only applies to the income that's generated by that corporation, correct?
Yes.
Yeah. So that 100,000 that person's earning in salary is still taxed at the regular amount.
Yes. Having a job, full-time job, there's very limited opportunity to do income splitting or limited tax strategy available to lower your taxes, unfortunately.
Right. But for realtors, so I believe that as of October 1st, there's going to be an opportunity to incorporate. So does that mean that if that's the case, there will be opportunities to do income splitting as well?
So yeah, that's a great question because I'm glad you asked. Realtors are soon to be allowed to incorporate. The thing is they are still in draft legislation right now, and I reviewed the draft legislation of what's required, and income splitting opportunity is minimal in realtor situation. There are still opportunities, but it's only when you reach the age of 65 and when you cease to do realtor business, because realtor is considered a service, but real estate investor, long-term buy and hold type of business is different. It falls under one of the off-ramp. It's not providing services, so then there are different income splitting rules involved.
Okay. So just because I'm curious, because I am a realtor, I was wondering, at what point do you think it would make sense for someone to incorporate as a realtor? What income level or what should I be looking for?
Great question. We are in the process of doing a funnel, a webinar funnel. So free webinar, planning to do free webinar to real estate agents who are on my list and also publicly to teach them at what level it is to for you guys to decide whether you should incorporate. Everyone will get the invite, but on a high level, basically you need to decide your personal budget, personal expense, the non-deductible expenses. So for a typical realtor, we are talking about, hey, how much do you need for your living expenses, your housing costs, your food costs, and then plus your kids' hockey costs, basically add them all up, travel costs. These are all non-deductible, only the non-deductible expenses that we care. So we add them all up and decide how much money you need to take out from the corporation. And then we do an analysis and say, hey, like maybe you only need to take out $67,000 from the corporation to survive. So we only take out 67,000, and meanwhile you are netting about 100,000.
Mm-hmm.
So if I pay the tax in the corporation, only 12.5%, and then I take out only 67,000 to support your personal life expense, I still have a delta of that $30,000, let's say. So I have about $30,000 left in the corporation that I can use to invest and grow a real estate portfolio. That's perfect. But meanwhile, if your situation is slightly different, whereas in the situation where you are only netting 67,000 and you need the entire 67,000 in your personal name, then that means, hey, there's no point to set up a corporation, right?
Yes. Yeah.
So that's how we decide. And that's why it's hard to give you a rule of thumb and say, hey, George, you need to make sure that you earn over 100,000.
Right.
It's not quite like that.
Case by case. Okay.
Yeah.
And what would be a disadvantage of incorporating in that scenario? Is it just higher costs, more accounting fees, that kind of thing?
Yeah, for sure.
Okay. Fair enough.
That is the biggest thing.
Okay. So back to real estate investor stuff.
Sure.
Okay, so we talked about incorporating for a buy and hold, but if you are flipping, I would assume you would have to have a different corporation. You don't want to flip in your buy and hold corporation.
Yep.
So can you kind of speak to that a little bit?
Yeah. So flip, the way that Income Tax Act treats the two type of investment is different. Just because you're buying and selling properties, a lot of taxpayer out there are under the impression that are mistaken, and they are under the impression that just because you're buying and selling a property, that means automatically when I sell, it's taxed as capital gain. So if you flip a property, that also includes assignment deal as well. If you flip a property, when I say you flip a property, you buy it with the intention just to hold it and renovate it up and then sell it for a quick profit. That's mostly considered flips. And if you do that, 100% of the profit that you made from the deal is considered income. Mm-hmm. When we talk about business income, it means 100% of this income is taxable. Whereas on the other hand, if you do a long-term buy and hold, you receive rental income, your goal is to earn some rental income over the long run, and a few years down the road, you made some money by selling the rental property. The capital gain, the profit that you made from the sale from a long-term buy and hold is considered capital gain. And capital gain is 50% taxable. Mm-hmm. So 100,000, only $50,000 is taxable. So right. Very different. Now, in the personal, in the corporation side, if you put a flip that the business, it's considered business income, 100% taxable, you put that flip in the corporation. The corporation is only, the profit is only subject to that 12.5% tax. So it's very beneficial if you continue to, you have an objective to grow the business and keep just reinvesting the profit, because you can reinvest in the low income tax rate environment. Mm-hmm. Now, the reason why you don't want to put the flip and the long-term buy and hold in the same corporation is because CRA has no way to distinguish one way or over another. Now, if you don't put them together, that's awesome, because if you put them together, because CRA has no way to distinguish it, they would not allow you to claim something called capital cost allowance, which is the wear and tear of the property. The capital cost allowance is only allowed to be claimed if the whole property, the whole corporation, all the properties held in the corporation are only used for for long-term buy and hold. For flips, for all those properties that are considered flips, technically they are considered inventory. You cannot claim capital cost allowance.
Mm-hmm. Got you. Mm-hmm. Okay. So if somebody's just flipping one property a year, does it still make sense for them to incorporate?
It really depends. Some people who has already $100,000 income, and then the flip is going to add another $100,000 income, then yeah, like of course it kind of makes sense. But then it goes back to the situation. Does he need the income immediately? Because if he incorporate and take out all the money immediately, then there is no point setting up the corporation. Right. But if the goal is to continue to roll with the profit, then yes, it makes sense.
Okay. Are you able to use the profit from your flip to go into buy and hold?
Yes, you can.
And that would be, there would be some tax advantages to doing that?
Yeah, because let's say you make about $100,000 from this deal. Mm-hmm. that the flip. In the corporation, you pay 12.5%. So that means you have 87,500 left to buy properties inside a corporate structure. It doesn't have to be in the same corporation, but it could be loaned to a different corporation to buy properties. But you have 87,500 to do it. Now, whereas if we hold the flips in our own personal name, okay, let's say I have the $100,000 salary to begin with. The next $100,000, just to round all the numbers up for easy calculation, is taxed at 50%. So the same 100,000 profit that I made from the flip, if I already have a base salary of 100, add in the flip income of 100, that additional 100 flip income is going to be taxed 50%. 50% goes to CRA first. Now, all of a sudden, I only have $50,000 left to invest, whereas in the corporation I have 87,500.
Right. Okay, so just to clarify, let's say you have corporation A, which you do your flips in, and you have corporation B, which does your buy and hold. If you have 100,000 profit in corporation A and you want to buy another property, like a buy and hold property, you'd be able to buy it under corporation B, transfer that profit to there without Yes. Would they have to be under the same holding company, or they could just be two separate companies?
If it is under a holding company, it's usually a little bit cleaner. But then if it is not a holding company, it's also fine. You can just transfer it over to the other side to do it. It will just be recorded as a loan, so it won't be off the balance sheet of the flipping company.
But that can only be possible if you are the owner of both corporations. Like, I can't loan that money to someone else's corporation.
You can.
You could.
If you want to, but you would not be doing it without a proper remuneration per se, right?
Okay. Like, I'm saying, for example, if I wanted to give it to my wife's company so she could buy a property.
Yeah, but then that gets a bit more complicated. Some agreement has to be signed, and then some interest has to be charged.
Okay, fair enough. And just to clarify one more thing. So like in that scenario where you have the corporation, you flip, and then you use all the profits for your personal use, you're paying 12.5% on the profit, plus you're paying your personal income tax on the amount that you're drawing out for yourself, correct?
The dividend, yes.
Yeah, so you're pretty much getting taxed more in that scenario than if you were to flip it in your personal name?
No, so there is something called tax integration in Canada. That's how the very important principle that I guess the original designer of the Income Tax Act decided to follow. Essentially, the income tax should not be the determination of how you want to own anything, any income producing property. So the money that you would pay in the corporation, 12.5, plus all the dividend that you will receive if you were to pull out in the same year and report it as your personal income, which would be dividend income, the tax that you would otherwise pay on the dividend income plus the 12.5% in the corporation would equal to the total amount of taxes that you would have to pay if you were to own that flip in your personal name and report it. So that's
so
the
they'd be
principle.
equal. Yeah, they would be equal regardless in that case.
Technically, but it's not always the case. It's all usually off by a few percentage point, but that's the whole premise, the whole reason.
Okay, cool.
That way.
Okay. Yeah, we covered a lot of stuff. I think some people might lose lose their train of thought here with listening to this, but I hope that there was some good stuff. Is there anything else that would be important to know as an investor, either for buy and hold investors or flippers?
Yeah, there are so many different things that could be useful, from the type of deductions that they can take to setting up the right system, to having the proper corporation structure and having the right team on their right team of professional to work with them. They are all very important. And just because I've got so many stories that I've heard from my prospects and clients, they would come to me and say, hey, like I heard about this. That's the reason why I'm doing this. But just because you heard about it from someone else and that person is doing it, it could be based on a very different set of circumstances and it may not be applicable to you. So it's very important to have the professional having that consultation.
Yeah, definitely. For sure. Okay, that's great. Well, I appreciate you sharing all that. Maybe one last thing before we move on to the next section. I'm just curious to know, how many properties would you recommend having under one corporation before you open up a second one?
This is a tough question. It's not really a tax question. It's rather a risk tolerance level question. Recently, I've heard about a story. Actually, I heard about it from my team, and then my team heard from one of my team members heard from her brother, who's a dentist, and he heard it from the patient. So I don't know how accurate it is. The story was that one of the tenants got burned, or accident got burned from cooking something, and he sued the landlord for not putting a smoke detector in the kitchen for $5 million. Wow. And for some reason, this guy won. I don't know how the tenant was able to win, but he won. And so the landlord had to liquidate everything. Now, if you ask me, in a perfect world, if cost is not an issue, of course, you have each property should be held in one corporation, because the risk would be all diversified and limited to just that particular property. Yes. But the reality is there is a cost associated with filing all the tax return. Typically, my clients are comfortable with anywhere between 5 to 10 properties, but any more than that, it would be really tough to put it all together in the corporation.
Right. Okay. So in that example with the fire and the tenant suing the landlord, so let's say that one property was in the corporation. So in that case, then they could only lose that one property if they were sued, or could they pursue them for their other assets as well?
For all the other assets held within the corporation.
That's it.
Yes.
So if
but
you
not
have
in the personally owned.
Yeah, if you have like your primary residence, you have 10 other corporations, they all have properties. The tenant can't pursue any of those other properties, even if they sue them for $5 million, and that property is worth, say, $400,000.
So I have to be careful because I'm not.
Yeah, you're right.
From a legal perspective, a lawyer would be a better position to answer that question. Now, I can't talk to that case specifically because I really don't have all the detail. Now, in theory, if the property is owned within the corporation, technically you sue the owner is the corporation. And then so they can technically go after all the asset within that company A. Yes. Now you can company B to Z, that tenant would not have the right to sue for all the other ones.
Right. I understand.
Yeah.
Yeah. That's more of a lawyer question.
Yeah.
You're right. Okay. But that's good to know. So that's definitely an advantage to having a corporation for your personal protection. And you were saying 5 to 10 properties, most people are comfortable with, but it's a matter of your personal risk tolerance.
The tax structure is the same. I mean, tax impact is the same, whether you have 1 or 10 or 50, unless you can hire more than 5 full-time employees, and the tax rate would be different.
Got it. Okay, perfect. So before we jump into the next section, is there anything you want to add?
No, it's good.
Okay.
What's the next section? Are you asking me 5 questions, right?
Or 5 random questions. So awesome. Everybody pretty much gets a different question, anyone that I interview. So this is the first time anyone's gonna hear this, but the first question is, what's the funniest joke you know by heart?
Funniest joke I know by heart. I don't have any.
Okay, don't worry about it. That was a tough one. When I read it, I thought most people probably don't know off the top of their head.
Yeah, I would laugh at like all my kids' joke, but then they are not really that funny.
Yeah.
I would laugh at them because they are my kids.
Yeah, fair enough. Okay, what's the best show currently on TV?
I'm so sorry. I don't watch TV. Now, I can say that I watch most of the Raptors. The Raptors,
Okay.
mostly the Raptors playoff, and
Yeah.
that's the only thing that I watch.
Yeah. Okay. I'm with you on that. Although
Yeah,
they're disappointing right now, but still.
I know, I know. They
Yeah.
lost last night.
Yeah. So we're recording this on September 2nd. So they're down 2-0 to Boston right now.
Yes, yes. They
Yeah.
will win the next one.
Yeah,
They've been
exactly.
here before.
Yeah.
Yeah.
Okay. What sci-fi movie or book would you like the future to be like?
Sci-fi movie. So it's kind of like Star Wars, right?
Yeah, yeah. Like
Okay.
science fiction.
I don't read science fiction.
Okay.
I think um I think the only movie that I watch would be Star Wars.
Okay. Yeah.
And I don't think I necessarily want Star Wars, although they always win.
Yeah.
The Force always wins.
Right. There
Yeah,
you
am
go.
I saying it right?
I don't know. I've never watched Star Wars, so I'm not the right
Yeah.
person to ask.
Well, although I feel like we are moving toward there was one book that I read when I first came to Canada. It's the Big Brother and Big like it's there's always that Big Brother watching over you.
Mhm.
I feel like we are moving toward that
Yeah.
rather than Star Wars.
Yeah, like we're starting to see a little bit more with a little more control now.
Yeah, oh for
Yeah.
sure. Like I
sure.
mean your phone is always listening to you.
Oh yeah, that's scary.
Yes.
That scares
Yes.
me for sure.
Yeah.
Okay. What's the best way you or someone you know has gotten out of a ticket?
Best way?
Yeah, the best way.
We've heard all these stories, but I could share a personal story. I was young and I was driving I was young and fearless
Yeah.
and then a little bit stupid at the time. I was driving a nice car and
Mhm.
I came from a show that was in a concert that was hosted in Casino Rama.
Mhm.
So, you know, it's all along 400 and I had to drive back at nighttime. It was late. It was like 12 and I
Mhm.
was speeding and I got pulled over by a cop
Yeah.
and I was speeding maybe 30 kilometers over.
Yeah.
So the cop was about like stopped my car and said, "Did you know that is this your car?" And I was young, right? And I was driving a Mercedes. So it was a valid question, like, is this really your car or your
Mhm.
dad's car? And I said, no, it's my car. And he was about to give me a ticket. And at the end, it was all the way lower to like maybe just a $30 ticket.
Oh,
I
wow.
said nothing. I've put my face like because I was scared and nervous, and then I
Yeah.
didn't know how to react to it. And my friends was like, "Well, did you know how nice like? Did you even recognize how nice the cop was to you?" I'm like,
Yeah.
no, I was just scared."
Yeah.
Yeah,
That's pretty lucky.
yeah,
I think cops are a little bit nicer to women from what I've heard.
yeah. I think
Yeah, I don't
so.
know why, but it just seems like if you can cry in front of the cop, I think they'll be pretty nice to you usually. Yeah.
I couldn't even bring myself to cry. I'm like,
Yeah.
many thoughts went through my mind, but I just couldn't bring myself to cry. I was
Right.
nervous. Yes.
Yeah.
Yeah.
Okay, that's a good story. The last question is, what success principle do you live by?
Many. I have so many different principles that it's hard to keep track of. So we just went through in our companies, we just went through the core value, selection of core value. One of them is called success is best when shared, learn more and educate others,
Mhm.
always do the right thing. There's one more, I don't remember, but these are pretty cool ones.
Yeah.
To me, being a mom made a huge difference in my life. It provides a lot of meanings. I want my kids to turn out a certain way. That means I have to live in that certain ideal that I want them
Mhm.
to be, to model, to give them the model, to model after. So, and that is what I'm trying to do, lead by example.
Perfect. That's great.
Mhm.
Well, that's very good. So before we finish things off here, do you want to tell people how they could reach you and maybe like share your website or something like that?
Yeah, absolutely, Mike. You can visit my website. I do a weekly tax tip blog post. I share with my list, and we have about 8,000 people on the list. And website is realestatetextips.ca. Real estate. It's not USA. It's real estate.
Yeah.
REALSESTATE. Because of my accent, people don't understand it. Realestatetextips.ca.
Yeah, we'll put it in the description too, so they can click.
Okay, awesome. Thank you.
Yeah, so that's the best way to reach out to you. Just go on the website, check out all the information's there.
Yeah, sign up to the free weekly text tip, and if you have you want to reach out to me, you can respond to the weekly email, or you can submit your questions there as well.
Awesome. Thank you very much. Really appreciate it, Cherry. And any final messages?
No, enjoy the moment. Recently, I have a client who had issues with mental health and unfortunately passed away. I think it's the most important part is to enjoy what you have right now, be grateful, and there's always something that you can appreciate and be thankful for.
Well said. Well said.
Yeah.
Thanks a lot.
Awesome.
All right.
Thank you.
Take care.
Thanks.
Thanks once again for listening to another episode of the Well Off Podcast. Just want to remind you that if you do appreciate the content, all I ask is that you comment, maybe like it if you can on the platform that you're listening to it on, and finally share it with friends and family. I'd love to get the message out there, and it would mean a lot if you can share it. And finally, I just wanted to offer you, as a valued listener, a free copy to the Roadmap to Real Estate Investing, which is a document that I've put together which helps you identify what strategy would best suit your needs at this current time. You go over certain things that are included in this document step by step, and it'll hopefully provide you with some clarity. So have a look. You can go to www.welloff.ca/guide to download your free copy.